Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the March 1st edition of Basis Loaded with Joe Schmit. I am Joe Schmit, joined as always by Paige Driscoll. And what we do here is break down the latest NDPSR report, starting with butter. This butter number coming in at 243.64 is a plus 1.5 to the CME 1 week average of 242.15. We traded 10 loads on the CME that week, so you would expect lower than normal basis. 1.5 would qualify. This is also an uptick week at the CME, so you would also expect lower than normal basis. Two conditions that would lead you to believe that we could expect lower than normal basis, and that's exactly what we received, with butter only coming in at 1.5 over. What is nice, glass is half full, the volume, 3,940,000. So 440,000 above our expected volume. The manufacturer had to discount a little bit, but was able to move a lot of weight at that slightly discounted level. And then the real story is in cheese, blocks, 192.85. That is a plus 7 to the CME 1 week average of 185.85. We did trade 7 loads at the CME. You would think that that would bring basis down a little bit. Did not in this case. This was the low week at the CME before retracing back towards the 190 level. On the low week, you would expect higher than normal basis. Plus 7 is, of course, 3 times over our expected 2-cent positive basis. You know, on this show last week, we were talking about some of the reasons why we have this inflated basis in blocks. Is it a matter that we are just in the descending spot market? And in a descending market, the NDPSR lags a little bit, so you get higher than normal basis? Is it because forward contracts were initiated this year, renegotiated at a higher level than whereas prior years it was only 2 cents over? Or did we have a big export deal at the end of last year that when prices were elevated and that product is still shipping? It could be any of the 3 possible scenarios. We would have to enter into a dark room with Aaron Rodgers to truly find out what's happening, but we do have positive basis. It's funny, even at this plus 7, this block number at 192.85 is a little bit lower than I was expecting. And at that plus 7, the manufacturer was only able to move a little bit north of 11 million pounds. So lower than expected volume on higher than expected basis in blocks. In the barrel, 161.73. That's a plus 5.5 to the CME 2 week average of 156.62. And that lower than expected basis could be attributed to all the volume trading at the exchange. Of course, those prices get reported minus freight. 35.5 loads per week was our average volume at the CME. Just massive volume at the CME. And that volume at the CME translates here to the NDPSR, north of 15 million pounds. North of 15 million pounds for the second week in a row. Impressive volume for the barrel. However, that basis at 5.5 is right in between our expected 4 to 6 positive basis, but lower than we've been experiencing in prior weeks. Next up, whey, 40.28. That represents a minus 2 to the CME 1 week average of 42.50. So they took the CME up 6. NDPSR kind of shook it off, didn't really pay much attention, trading just moderately higher. You'll notice if you go back to that February 11th NDPSR, 40.28 is a little bit premium to the February 11th number of 39.87. So that's new as this dry whey market consolidates near the 40-cent level. The manufacturer was able to call a little bit of a premium to prior week's NDPSR. And at that little bit of a premium level, the manufacturer was able to move a robust amount of product, 6.9 million pounds. So almost 2.4 million over our expected 4.5 million. So just huge volume in the way for also 2 weeks in a row. Looks like a lot of the whey stream coming off of that barrel production is ending up in dry whey production channels. And then lastly, non-fat, 122.97. That's also a negative basis. So both of the powders with negative basis this week, that's a negative 1.5 to the CME 1 week average of 124.55. Now the CME, similar to whey, up 5 cents to the high week. And the NDPSR down a little over 1.5, almost 2 cents to this 122.97. So that's a big reversal of basis in non-fat. In prior weeks, we had those elevated basis levels. It doesn't take long for the NDPSR to catch up to the break at the CME. What's interesting, though, at that discounted level, the manufacturer was able to move a lot of volume. And if you look back, we now have 5 consecutive weeks with the weekly volume north of 20 million pounds, with some weeks, 2 out of 5 weeks, north of the 25 million pound level. So this is the final week of Fed pricing. And February Class 3 goes off at 1778, a little bit of a disappointment relative to yesterday's expiration. Lower whey and lower cheese, seemingly the culprit. Class 4 goes off at 1886. If you carry current CME equivalents out through the remainder of the 5-week March pricing cycle, getting a March Class 3 of 1743 and March Class 4 of 1828. We'll see what they have in store for us in the weeks to come. Until then, thanks to Paige for producing this week's episode with the help of the entire EverAg Insights team. I am Joe Schmit. Take care. Bye.